Oh man, compound interest, retirement planning, investing for the long haul, taking risk, and budgeting, they're not going to make you wealthy. I know it might be controversial, but it doesn't matter how hard you work or how much you save. If you're locking your money away, taking unnecessary risk, scrimping, you're just not going to get wealthy. The wealthy use a different method, an effective method. Effort's not going to save you. Retirement planning can't save you, but there is a predictable way to get wealthy. So let me show you. It simply amazes me that so many people continue to fund faulty plans with their hard-earned money, and those dollars, while the wealthy make and keep their money in a completely different way. How many times have you heard that you have to stick to a budget? Well, no one shrinks their way to wealth. Well, it's a game of value creation. It's about expanding your means, not just limiting your spending. Or how many times have you heard that you're in it for the long haul? I mean, we are hearing that to the point where it kind of makes me want to vomit right now. This is what everyone is told. Well, the wealthy make money immediately. They cash flow from early on. They learn how to make money on the buy, and they achieve more in a few years than retirement plans could ever do over 30 years. Bold, I know, but stay with me. I'll show you exactly what they do and how you can do it. Does anyone else feel pissed when you hear that the market's on sale right now? Like, far too many people will jump in the stock market thinking it's on discount. But in 2000, it kept going down all the way to 2002. And in 2008, it kept going on all the way through 2010. The bear market was almost 3 years in both cases. It's not on sale if you don't know what you're doing, if you have no exit strategy, or you don't have unique ability or knowledge as to why it would be a discount. So is your retirement plan as far along as you thought it would be or want it to be? Is it performing how you were promised? Or did you hear the ever so common past performance isn't a predictor of future results? The wealthy aren't relying on retirement plans, and neither should you. Well, that is if you want to be wealthy. So I've got good news and bad news. The bad news, no one cares more about your money than you do. No one's coming to save you with some magic product or investment that gets you exactly where you want to go. To make matters worse, most financial professionals, they're not actually managing money. They're learning how to build rapport and sell products. They don't make trades or predict markets or protect the downside of investments when the market's tanking. Well, the good news is there's a better way. You don't have to take these monumental risks, but it does require responsibility. See, the wealthy focus on guarantees by being efficient with their money, not by cutting back. They know the game is about creating cash flow while managing their risk. They're not waiting for 30 years to find out if their plan's going to work out. They're not overly reliant on a stock market to determine if they get what they want or just make others rich while they take on the risk. It's time to learn the rules. It's time to ethically rig the game in your favor and get started on your path to financial independence. I'm going to break this one down into 5 simple parts for you. The first one, if you've watched my videos, I emphasize it, but it can never be emphasized enough. Create liquidity. You got to have a peace of mind fund. You are your greatest asset. Protect it with cash so you have staying power. Savings and investing are 2 different things. Savings is liquid, it's safe, and although it's not going to outperform inflation, it still has a benefit and a return. For example, what if you had like a war chest, right? Where you can handle short-term issues with cash flow crunches and pandemics or business interruptions, right? What about having an ability to get loans because you have seasoned money? When you have cash on hand and you need to get a loan, when you've got 3 months savings set aside, you're more likely to get a loan or to get a better interest rate. What about having an opportunity fund, right? When other people are losing because they're overly reliant on net worth and there's down markets, you're not worried about cashing out and having a realized loss. You can capitalize without the fear of that, without the fear of realizing that loss. Distressing times create opportunities to help distressed people get a return on that value. People that have a war chest can actually pounce when there's distress, when everyone else is running and hiding. If you're willing to stay patient when everyone else is greedy, and when you can provide liquidity when everyone is fearful, that's when things go on to a deep, deep discount. See, wealthy people, they buy businesses. They own businesses. Private businesses are absolutely cheap compared to the stock market, like maybe a tenth of the price. When you have liquidity, you can actually take advantage of opportunity. When you're illiquid, then you become kind of swaying with the winds of the market. So what if you're not wealthy and you're currently struggling? Well, it's time to save rather than invest until you get to at least, and this is a low amount, at least 3 months savings. That's an absolute minimum. You might be able to use hardship provisions for your retirement plans to avoid a 10% penalty, and that way you can get liquid. You could refinance if you have good financials to qualify for the extremely low interest rates right now. You can look through your insurances and get multi-policy discounts or find duplicate coverages in your insurance, or you can increase your deductibles. And by doing that, you can pay the insurance companies less. The second step here, the wealthy focus. They don't just diversify. Diversification is when you're looking to preserve already existing wealth, but focus is required for growth. Andrew Carnegie said he put all of his eggs in one basket and watched it like a hawk. So stop spreading yourself thin, or stop giving up control of your money in hopes for a one-day, someday payoff way in the distant future. When you focus, you have more ability to manage risk. You build your foundation first, you transfer risk through asset protection and insurance, and you make sure you have that liquidity like in step one, but now you have a better chance to grow your wealth because you become a better investor. Really wealthy people, what they do is they become great investors, but they invest first and foremost into their skill sets, into a business, and they only invest in what they know because they know outside of that, it's merely speculation. They get great at building wealth with that knowledge, all right? I'll go into more of that in a little bit, but let's focus on where you can be a good investor. Where are you willing to invest time? Where are you able to increase your financial IQ? Where can you understand how to generate a return? The wealthiest people make money in their business, investing in people, investing in processes, and automation and technological procedures, or buying businesses rather than speculating in investments they don't understand. Mutual funds are the best example of what I would call diversification. You're spreading yourself into more things than you could possibly understand. You're limiting your growth. You're constrained by rules that may not make any sense. For example, a growth mutual fund has to invest in growth stocks even when it's not in favor. Is growth stocks a good thing to be in right now? I don't think so, unless you're invested in Costco, or maybe invested in, companies that are providing massive amounts of value in these desperate times. If you get too passive with your investments and then you just hand your money over, you're going to limit your upside, and it actually hurts personal responsibility. This is where people get overpromised and where we see an underdelivery of that value and of that return. Well, if you're investing in things you don't know, consider cashing those things out so that you can learn to invest better, that you can learn to preserve and protect that principle. Maybe it's time to pay off loans. Maybe now is the time, and you got to be careful with this, but maybe it's time to start adding value and be more of an intrapreneur or an entrepreneur. Maybe you can provide value in these unique times that's not being currently provided to turn a profit. But if you want to be passive, well, maybe you should learn about cash flow banking in my other videos. Many wealthy people invest in real estate, but if that's not your gig, then you definitely shouldn't invest in real estate because you got to treat it like a business. Do you know much about if it's a good time or a bad time, how to finance, or how much down payment, or what deals to say no to or what deals to say yes to, or how this market's going to, impact real estate overall as lending restricts with the banks? Don't get involved in things you don't understand. You can't go out there and be an expert in all the strategies available. Pick one or no more than just a few. You can watch my video on the 4 assets that will make you rich and pick one of those 4 and then follow those guidelines. If you're going to jump into real estate, that's one of the assets that can make you rich, but I have a 15-point guideline in that video to make sure that you don't get into harm's way. So if you're buying businesses, buy businesses that make sense based upon your knowledge or an existing business that you already have. Don't go get involved in a business you know nothing about because it sounds sexy or seductive or other people made money doing it. If you're buying private businesses rather than stocks, it might make more sense because you can actually influence the cash flow, and because a lot of those businesses are going to be distressed and on discount. You might even be able to be profitable from day one. Are there businesses right now that complement your abilities or that existing business if you have one? Regardless of how much money you have, it is the same for everyone. You've got to invest in yourself and your financial IQ. These videos are definitely a great start, but you got to pay attention to your finances and where you can become a better investor. Don't expect someone else to do it for you. The third piece is to build relationship capital. Relationship capital is critical. Who can you rely on? Who could you learn from? Who can you add value to? Now, in the financial world, I've got a team of experts that I utilize, but I don't completely rely upon them. I don't just go, I'm handing the money over, I hope it all works out. No, I invest in things I understand, and then I utilize experts that understand it even more deeply sometimes. See, you can leverage and scale if you have a good team, like a tax team, or a legal team, or an investment team, Or, even the right types of managers if you're buying a business that can help employ what you're doing. That's what Warren Buffett's brilliant at. He's got a great team of managers when he buys a business. You don't have to know everything, but you've got to have people that you can trust, that you can learn from, that you can work with, where you can grow together. Mindset is absolutely key if you're going to build relationships. You've got to know your value and add value. It's not just about what you can take. I'm only making this a small part of this video, but it's probably the biggest thing for creating wealth that there is. Wealthy people know that they've got to hire the right management team rather than do everything themselves. If you don't have the money to hire a team, you can always offer to deliver value for someone you'd like to mentor you, or watch videos online or take courses. One example is you can download wealthfactory.com/megakit as a resource to get started. Plenty of resources. You've got to put in the work and the time. It won't happen for you, but if you stay committed, it can happen because of the actions you take. Now, if you have money, you can just hire a team, right? You can go to wealthfactory.com/private and you can acquire that team and save, a decade of time and have that, built for you from, 21 years of our expertise. The fourth thing, and this is critical as well, you've got to learn to monetize skills. This goes back to the second point of focus. Don't diversify. And also to building relationship capital by doing the things that get the most output consistent with your highest ability. See, if you went to college, they don't emphasize learning to monetize skills. Like general educations, okay, you go learn a bunch of stuff, but what do you do to actually monetize that? What do you do to create cash flow from that? People are so busy checking off those boxes with general education that doesn't amount to much of creating wealth. Maybe it helps them learn a little bit. Maybe it gives them a well-rounded type of thing, but it doesn't do enough for making money. It's one thing to know how to speak on stage, yet it's another thing to monetize it. I know people who are great speakers, but it doesn't lead to action. They might entertain, but they don't create enough of bullet points of what people can do. It's another thing to write a book, but it's another thing to profit from it. There's so many people writing books today. The majority of those books never sell more than 100 copies. Monetizing comes to learning how to market, learning how to get it in people's hands, learning how to create practical steps of action. People that are wealthy are versed at how to actually add that value. They know it's about making more money by knowing how to reach people and impact the people they reach. So if you can create recurring revenue than one-time transactions, you can really survive these difficult times. Again, it's not always easy to figure out, but very profitable. And the wealthy do this fantastically. The wealthy do what they do best the majority of their time, and they limit doing everything else on their own by collaborating with other people. Marketing is part of that equation. Manipulation is not. That's not a way to sustain wealth. There's people that are good at peddling shit, but they're not good at making sure people actually get value from it. Books that do really well are books that get word of mouth because they're truly valuable. When things start to become, difficult and cash flow is restricted and there's quarantines and viruses and an economy that's in turmoil, we've got to find ways to be efficient, to fulfill on whatever we promise with marketing. Consistently ask these questions. How can I impact more people? How can I more deeply impact those that I serve? That's always in my mind. If you want to fully monetize your skills, you might have to outsource, hire. You might have to manage your calendar on a daily basis. This is about how to grow your income first if you want to be wealthy. If you're looking for the right team, go to wealthfactory.com/private to get your financial house in order, to preserve your time, to monetize your skills, and really to collapse the amount of time it would take to go do all this on your own. One of the biggest advantages that people can have is economic independence. How do we create that? There's 5 levers. The first lever is we got to go out there and recover cash. It ain't just what you make, it's what you keep. This is about being financially savvy. This is another reason to have an amazing team. The second piece is engineering wealth. What does that mean? No more scrimping and trying to get 10% of your income invested. Wealthy people know their economic independence number and can accelerate growth when they reach it with assets that create their cash flow. So what's that monthly number you need? Reverse engineer that, find ways to plug the leaks, find ways to create cash flow, which takes me to the third piece, accelerate your investment income. Cash flow investing is so much different than accumulation. Cash flow might mean you have to be more active. It's not just handing it off. You've got to build an infrastructure where value can be created and that you can get cash flow from that immediately. It's not about waiting for 30 years for a payoff. It's about returns now and in the future. It's about making money on the buy from day one. The fourth lever is to scale business revenue. So if you're an employee, find how to be an entrepreneur. How do you add more value to the bottom line and get a piece of that value that you offer to that company, even if you don't have ownership, right? It's about creating more equity in a business if you own one, because you don't have to be responsible for every step of cash flow, and simply learning how to delegate so you do what you do best. Finally, the fifth lever is to make it count. There's a big difference between being rich and being wealthy, right? Being rich might be chasing money. Being wealthy is managing your energy and improving your quality of life. It's really looking at you as your greatest asset. It's about determining what a win is for you and creating a compelling vision that can see things through. The other way you could do this, try to compound your interest and wait for the long haul. Work on retirement planning and hope the market doesn't keep tanking. It might be taking risk and hoping that those risks pay off, but knowing that a lot of times they don't. And budgeting, that's more about restriction and reduction over production. I want you to live and be wealthier. It doesn't matter how hard you work or how much you save. If you're locking your money away, taking risks and scrimping, you're never going to get wealthy. The wealthy use a different method, an effective method. You can work hard, but if you're using the wrong methodology, it may do the exact opposite of what you want. These 5 things unveil what the wealthy do differently. Now you have the knowledge to transform your thoughts into profits and build the life you love. If you're looking for more on this topic, check out my video on the 5 levels of wealth. You'll learn how wealth is not defined by numbers in a bank account. It's the mindset. It's the value you add. How do you add more value? Well, I'll see you there.